Episode of the NJ Show. Are we live? Oh, live streaming isn't available right now. Try again. Are we live? Can somebody let me know if we're live, please, if you don't mind? Apparently, live streaming is unavailable, according to this. No, we're live. There we are. There we are. We are live. How is it going, everyone? Welcome back to another episode of the NJ Show. Today's not your average episode. Today is a watch along for FOMC. We are going to be watching the market to see how the market unfolds through the Federal Open Markets Committee's decision making today. Are we going to get 75 basis point increases? Are we going to get less? Are we going to get more? I don't know. To be honest, I don't have a crystal ball with me right now. I don't actually know. But what I do know is that the market is going to react. We are approaching that final stage of the bear market now, where we're looking for those levers. We want the catalyst for Bitcoin to give us that final drop that we're looking for. It's not going to happen today. I shouldn't think it would, but you know, a basis point increase isn't bullish no matter what we do. All right. So smash up the likes. Make sure you're subscribed to the channel, bottom right hand corner. A big shout out to our sponsors for this episode, Binance. Binance is the largest spot exchange in the world. It's the best crypto exchange in the world, the easiest to use. Everybody knows it. Everybody's probably already got an account. But if you don't, for some random reason, please sign up using the link in the description below. Okay, it does support the channel. It helps me. It helps the channel grow. It helps everybody. It makes everybody happy, mainly me. Okay, so appreciate everybody tuning in today. How's everybody doing? Get the comments in. I can see a lot of comments in there already, but get the comments in. I'm reading them as we speak, and I'm going to do a quick shout out, and then we'll start talking about FOMC. All right, so who have we got in the chat today? There's so many chats right now. I can't scroll all the way to the top, but we've got Mr. Napes. We've got Crypto Mac. Crypto Mac says 46 waiting, only 16 likes. Let's get those likes up. Smash up those likes. We like to get 100 for every episode, but we'll do what we can today. All right, so smash up those likes. We've got Frederico. Where are you tuning in from? Good afternoon, all. Live from home. Wow, Frederico's never usually at home. We've got Lily saying, do I have a Discord? Unfortunately, I don't, Lily. I'm really sorry to say I don't. We've got Aromatic here. We've got Phil, the Flying Frenchman. Thank you for tuning in. Appreciate you, Phil. We've got Elizabeth, my number one. Please, guys, respect the moderators in the chat, okay? Show them love when you can. Engage with them where you can. They work hard. They work for free. They're doing it for the love of crypto and in it for the tech. So show them love, okay? We've got Luke in the chat. We've got Crypto Mysterios. We've got Crypto Piggy. We've got Marta in the chat. We've got Dank McDizzle, Christy, Rolly Diaz. We've got Chuanavara. We've got the Kaneku, we've got Elvin, we've got a full house today. We've got Victor, we've got Mujib, we've got Sam Camille, we've got a name that I can't pronounce here, but hello, good to see you, Snijizana. That was a horrible attempt. I apologize. It was KAR Crypto. Good to see you, my friend. Thank you for joining the show. Appreciate that. Mr. Wet. We've got Marco saying like, subscribe. Boom. Like, subscribe. Like the video, subscribe. Thank you very much, my bro. And we got, there's just too many. There's just too many of you guys. Way too many of you guys. Rightio. Okay, so the first thing that I want to ask you guys today is, what are your thoughts on the FOMC press conference? What do you think we're going to get? A lot of people are talking about 75 basis points. I'm going to leave it to you guys. Are you bullish? Are you bearish? Or are you just here for the entertainment? Let me know. I'm going to put this poll up right now. So, thoughts on FOMC? Bullish, bearish, because I want crypto to die. Or a third option, here for the entertainment. You guys let me know. There we go. Boom. Right, the poll is live, so get your votes in. Okay, I'm interested to see what you guys are thinking. In the meantime, let's share my screen. Let's start looking at what this market is doing. Okay, we're going to be looking at the speech as well. Don't worry, Sultan of Doom here says, let's look at the speech. Well, give us some time. I think the Fed are going to go live at 2:30 p.m. ET. I'm sure that they'll post a link during that time. Okay, So we'll see. So look, yesterday we were talking about Link. I didn't mean to have Link up here like this, but we were talking about Link yesterday anyway, and I did mention that invalidation would be this sort of low right here. We haven't wicked that low yet. Okay, we haven't wicked that low yet. Maybe we will for FOMC. Maybe we will. Who knows? But we've held. Okay, now targets are above. And obviously below is where I don't want to see price go. If it wants to go for the deeper pullback during FOMC, we'll see. Okay. I don't know why I'm doing Link to begin with when we've got Bitcoin to be looking at, but there we go. There we go. So let's just zoom out a little bit of Link just to show you the range I'm working with. You can see here you got the range low, the range high, and the mid range. And where are we right now? We're at the mid range. Okay. And it's a very, very pivotal level. As you can see, resistance, 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 support right there, rallies to range high. We can't get above the mid range, can't get above, can't get above. We finally come below and now we're getting back above. So look, listen, real talk. I don't advise trading during FOMC no matter what. All right. However, just from a charting perspective, do your own due diligence. Looks all right to me, you know, with a clear invalidation on the lower time frame. On the higher time frame, look, I'd be kind of happy if it wants to do something like this. If it wants to give us that deviation so we've got our invalidation, that'd be perfect. Perfect. Schoolboy trade, schoolboy trade. But let's have a quick look at Bitcoin as well. What is Bitcoin doing? Is Bitcoin doing anything out of the ordinary? Now, we know from yesterday's episode, we had clear targets for Bitcoin on yesterday's episode, all right? And the reason I like to keep it on the higher time frame is because during periods like this, where the Fed are making big, big decisions, you get these very, very ugly data-driven wicks. Event-driven wicks, sorry, not data-driven, event-driven wicks, all right? And it's just not something that you should be advising people in general to be trading the lower time frame, especially with low experience. You should have a couple of years under your belt for that kind of trading, you know? Now, FOMC, what we're seeing here for Bitcoin is, I'll be honest with you, it can easily go in both directions, okay? And I'll explain why. I'm not saying it to just, well, yeah, obviously it can go up or down, you dickhead. I'm not saying it like that. What I'm saying is that right now we are compressing, okay? And this is the daily time frame. We are compressing. Small bodied candles lead to large, expansive bodily candles, all right? And that's what we're going to be looking to see going into FOMC. I think that we're going to start getting that chop, all right? Now, the weird thing is, when it comes to FOMC, I don't have the exact example for you here, but price will do something like this. The last couple of FOMCs it's done anyway. Price will do something like this, only to close right where it originally started pumping or dumping. Okay, so that's one thing to look out for as well. I'm not too keen on trading this. I know a lot of you guys will be in trades, all right? But I'll tell you what, let's have a quick look at the poll. I want to see what you guys are saying in terms of the FOMC. So look, everybody's saying here, okay, we've got 42% of you who say bullish. We've got 25% of you who says bearish, and we've got 34% of you that are just here for the entertainment. So look, I'll be honest with you, it's all good and fun. It's all good and fun. I'll close off this poll from here. But I do want to say that I don't think 75 basis points, having an increase of that magnitude, I don't think that's bullish for the market. At the same time, even though it's not bullish for the market, it doesn't mean that we can't have some fun trading it. You know, like, keep it small, keep your risks super in check, don't faff about. But yeah, this should be fun. This should be fun. Even back when I used to start trading at the very beginning, I used to love days like this, man. You know, if you've got that little gambler personality, you're going to be putting money down and rolling the dice because it's either up or down, right? But if you're an actual trader, you can see something setting up and you're so sort of torn apart. Should I take this trade or should I not take this trade? Because it's setting up to me in terms of price action, but FOMC is around the corner. So what should I do? Well, do you know what? You don't have to trade, okay? Look, all of us in the chat here, we're all watching this together. Let's have some fun while we're doing it, all right? Screw it. If you win, you win. If you lose, you lose. Don't bet too much. As long as you're not betting too much, you're good. You're good. We can actually have some fun here. So look, listen. We have got 180 people here and we only have 60 likes. That's just not good enough, NJ community. It's just not good enough. Let's get that over 100 likes, okay? And subscribe to the channel if you haven't already as well. The next question I want to ask you guys, what do you guys think of altcoins? Because I'll be honest with you, I do think that even if we get a 75 BPS increase, I still strongly believe that any pullback could be a room for continuation to the upside. We've got a lot of alts looking very, very strong today. You know, we've got a lot of alts looking super strong today. Yes, they are pulling back, but they're all pulling back into areas of support. Okay, so in terms of Bitcoin, yep, here we are with Bitcoin. We can't talk about anything yet in terms of Bitcoin. Bitcoin is trapped in a very, very small range from here to here. Okay, that's the range Bitcoin is trapped in, and that's what it looks like from a higher time frame perspective. Okay, so there's not much we can do here. You can see which direction it's going to go. You can see exactly where the resistance is here, where it will probably first find resistance if it's going to go up, and if it's going to go down, it's going to take a bit of a push to go down, in my opinion. We're at good support here. All right, and obviously the lower that Bitcoin goes, the closer we get to the bottom, you know. So considering Bitcoin is down around 85% over the last year, I wouldn't be betting too hard to the downside. I'm not saying it's going to go up today. It will take some time for us to accumulate. I do think the low is around the corner. Somewhere in the next 2 to 3 months, I reckon the low will come. All right. And when the low does come, it could be anything. It could be 14K, it could be 12K, it could be 10K. But I do believe the next expansion lower is going to be that low that then takes us into the accumulation phase, that takes us into the next bull market. Okay, so if you're excited, where are you all, guys? Where is everybody? Where is everybody? Let me know in the chat if you're excited for what's going to happen today. Are you going to get wrecked or are you going to get rich? Let me know in the chat. Are you getting wrecked today or are you getting rich today? I want to hear it from you guys. I want to hear it from the fat lady's mouth. You know, let me know. At the same time, we've got the dollar, right? One thing I want to remind you guys about with the dollar is this. And, oh, it does look a bit messy. Hang on. Remove this, remove this. Now, this is my favorite chart of the dollar, and I'll show you guys why. All right, this is what I predicted for the dollar, and so far, it's coming to fruition. Obviously, it's going to take weeks to unfold, but we will see. Okay, now this is the weekly chart for the dollar. Now, if you guys are new to trading, that's fine. Don't worry about it. Just keep up. If you're not new to trading and you understand what you're seeing on this chart here, you can see the range in between, you can see the channel, you can see the deviations, you can see the distribution areas. Then you tell me, what are you seeing here? Because to me, it looks like we have got to the top of the channel, and this is a 20-year channel, by the way. Okay, when this channel started, I was a little boy. I was still am to some degree, you know what I'm saying? Like, but you know what I mean. Okay, I was a child when this channel initially opened up. And now what I'm thinking is we're going to do something like this and something like this. Not today. It's going to take weeks for this to unfold. But if this was the if this area here was the Bitcoin bull market and this area here was the Bitcoin bear market, I'm guessing, a strong guess, that this area here is going to be the next Bitcoin bull market. Does it line up with anything? Perhaps the Bitcoin halving, May 2024? You know, you guys let me know. You guys let me know. So that's what I'm thinking with the dollar as well. I am expecting the dollar to stabilize here. And one of the reasons why is because, of course, you know, the Fed are looking to do another 75 BPS increase. If they are going to do another 75 BPS increase, then fine, they'll do that. But it will be the sixth or seventh one that they've done. All right. Now, if they've done it this many times and they've taken it to 4% plus, then at some stage, we're going to have to give it consideration that we're going to start, you know, cooling down. If you watched yesterday's episode, you guys will know within yesterday's episode that I said, you know, we need to start distributing now. We need to start accumulating now. We need to start, you know, chilling out a little bit. And lo and behold, the news that we actually got yesterday, all the articles that we read, etc., 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 all these articles, they were saying that the Fed are going to be slowing down. Maybe we'll get a 50 BPS increase in the next one, and then maybe 25 after that. We are fighting inflation. We are. The Fed are trying to do it. Lo and behold, their methods aren't accepted by many, but they are doing it. All right. So, in having said that, if the Fed are going to cool it down, it doesn't mean the dollar's just going to top from here and drop to the bottom of the channel. It means that the economy needs to reset a little bit. And to do that, the dollar will distribute here. I think as the dollar distributes there, Bitcoin will do the same thing in reverse. So if Bitcoin's at 14, 15K, you can expect some accumulation within that area. And then you know what happens next, baby. You know how the bull market is. You guys have been through that bull market. A lot of you here were in the 2021 bull market. You guys know. And girls, boys and girls, ladies and gentlemen, I know you guys know. All right. So that's what I'm thinking anyway. Now, what we'll do is we'll clean up this chart here like this. We'll go on the 5-minute time frame. Okay. Let's look at the 5-minute time frame here. And then, oh, goodness, no. And what we'll do is we'll keep it like this, and then we'll bring up another 3 charts. Okay, so we've got the dollar. Now let's put Bitcoin on the left. Bitcoin is the first box because we love cryptocurrency. We love Bitcoin. If you love Bitcoin, smash up the likes. If you hate Bitcoin, smash up the likes. And if you really, really hate everything, just subscribe to the channel. Also, if you like everything, subscribe to the channel. All right. So look, we're going to have Bitcoin on the top left. We're going to have the dollar on the top right. We're going to have the S&P on the bottom left. All right. Alongside Bitcoin. We'll do it like this. And then on here, what should we have? I don't think anyone really cares about oil anymore. Should we have oil? Should we have the VIX? I can see KAR Crypto mentioning the VIX. Should we have the VIX? Should we do that? Should we do, if not, should we do gold? Should we do silver? What do you guys want? Let me know in the chat. We'll leave this one open for the time being. We're trying to fill a spot for the 4th box because in 13 minutes, we're going to start getting these reactions from the market, okay? So let us know in the chat. Help us out. What should we do? Some of you are saying VIX. Some of you are saying gold. Some are saying BNB. Bond yields, that's a good one. Potentially bond yields, but if we know that they're going to be, hiking rates anyway, I mean, we wouldn't need to see it on a chart. They'd be telling us, wouldn't they? VIX, Dixie, Nasdaq, Doge, Mask. Why is Mask flying? That's a fantastic question. If you see, many altcoins have been rallying. Okay, many altcoins have been rallying. Considering that they're rallying, there will be a number of them that outperform, right? Like Doge did. All right. Gold, ETH, Doge, GBP, Ethereum, I can't make a decision. Moderators. Do we have the moderators in the chat? Can we get a decision? Can we help? So we've got Ethereum, BNB, Gold, Doge, and the VIX. Those are the options. Let's put a poll in. We'll put a poll in the chat, and we'll let you guys decide through the vote. Okay. I'll leave the poll open for 5 minutes. Do subscribe to the channel, by the way. Bottom right hand corner. It does take a second to do, and it's for free. While I get this poll up for you, lovely, lovely people. I do love these watch along episodes. I really, really do, because the market goes wild. The market goes absolutely wild. And I love doing it with you guys. It's not the same when you're doing it alone. Much, much better when we're all together. Right. So the fourth chart should be, we've got VIX. VIX had the highest answers. We had gold. We had a lot of gold. We had a lot of Ethereum, and we had a lot of BNB. Let me just have a quick look at the chat one more time. VIX, altcoin, total altcoin, BTC dominance. That's a good one. ETH, BTC, ETH, Doge. Right. I'm going to put this here. Right. So let me know in the chat. We've only got a few minutes to go. We've got 11 minutes to go. We've got to get hurrying up with this one. Vote in the chat. All right. The poll is live. Vote in the chat and let me know what you think we should have on the 4th screen. All right. I'll check that in just a moment. In the meantime, let's get the right time frames for the S&P, for Bitcoin, for the dollar. We've got it on the 5-minute already. We'll do it like this. We'll do it smaller because we know that when this thing starts moving, I don't want it to leave the screen. I think last CPI, was it CPI or FOMC? We saw it leave the screen. It went bonkers. Let's see what happens. Who's long at the moment? Who's holding any altcoins? Tell me the truth. Don't lie. Don't lie to Big Brother NJ. Tell me the truth. Who's holding altcoins? I know one or two of you are holding altcoins. All right, let's have a look at the poll. Let's have a look at the poll. So I myself, I'm not going to vote. So how do I? Oh, I'm going to have to vote. All right, screw it. I'm just going to randomly pick gold. Okay, wow. We've got 22% that are asking for the VIX. We've got 13% asking for gold. A whopping 54% asking for Ethereum, and BNB is 10%. So look, if you haven't voted, get your votes in now. You've got a minute or two before I close the poll off. Ethereum is winning by a hell of a lot. So I'm going to put Ethereum up for now because, you know, the ETH community are here, fam. The ETH community are here. Here you go. Here's Ethereum. All right. If we'll see if it can win or if it can lose. If it changes in the next minute or two, I'll change it. But if not, then yeah. Do make sure to check out my Twitter as well, everybody. Do make sure to check out my Twitter at TraderNJ1. Okay, you won't regret it. You won't. We just passed 50,000 on Twitter recently, and we are so desperately trying to get to 5,000 subscribers on YouTube, and I need your help to do it. All right, there's 222 of you here, and I only need around 130 to get to 5K subscribers. Now, I don't know if you guys can help me do that, but if you can, I would super appreciate it. Okay, super appreciate it. Let's see how this market is going to unfold. Who's excited? Who's excited? Real talk. Tell me real talk. Who's excited? I'm a little bit amped. I'm not going to lie. I'm a little bit amped. I've got the stock RSIs up here and RSIs for no reason. There we go. There we go. There we go. There we go. Let's have a look to see if the Fed have tweeted anything as well. Watch live today press conference. It's the same tweet. It's the same tweet. So we are going to have to we'll open up the YouTube channel anyway, right? We'll keep the YouTube channel here anyway. Oh, there we go. FOMC press conference. All right, I'm going to close off this poll now. I think Ethereum just completely destroyed everything else. Well done, Ethereum community. We can see here on the NJ show that most of the NJ community love Ethereum. Okay, Ethereum, what's Ethereum doing? Ethereum looks all right to me, you know. We haven't shanked to the lows yet on Ethereum. It's in a very tight range, kind of like how Bitcoin is, but it is a bit more volatile than Bitcoin is. Bitcoin is trapped within Monday's range, and Ethereum has been pretty much on a tear, even to the downside though. That's the thing. So let's go here. Yo, guys, so look, listen, I'm going to put the conference on. One of you guys in the chat, I don't know who it's going to be. Anyone, probably KAR Crypto. Please paste the results in the chat, okay? I'm going to keep this running. I'm going to keep this running like this. Let this run. Let it do its thing. Okay. KAR Crypto says, do you think a wick will stop my ETH short out from 1650? All right, let's have a quick look. Let's have a quick look. Let me close this like this. So 1650, we're looking really above here, aren't we? These highs here, but this is on the 5 minutes, so bear with me. So 1650, okay, I can see where you're short. Yeah, bro, 100%. Look, this is FOMC. I really think that it could, if it was, look, listen, KAR, you've got to remember, right? The first question you've got to ask yourself is, number one, where is price trapped? And number two, where are the stops? Okay. Now, the stops, very, very obvious where the stops are. The stops are going to be in two places. The stops are going to be here. Stops are going to be here. And the stops are going to be here. Okay, and that's kind of the range it's looking to play. Now, with FOMC, you know this just as well as I do, I'm sure anyway, that with FOMC, it can do something like this. Only to reclaim back to that price there. So I'll just bring that a little bit out there so you guys can see. This is what FOMC tends to do. So it's, if you're having tight stop losses, I would be very, very conservative. As long as you've got your risk in check, nobody cares. Like, real talk, you're not going to be bothered. If you're risking 1% of your account and you've got strong conviction on the trade, if it wasn't for FOMC, I would say that's not a bad trade. Target would be 1485. I'd be, that's a fantastic trade. You know, from that price, that's a couple R right there. You know, if your stop loss is at 1650, not sure where you would have got in, probably, I don't know, 1640, 1630, you know? But yeah, let me get this back up so everybody can see. I don't want to do this like this and then put it back on the 5 minute. This is going to get tense. What's the current market situation saying? What's the current market? So Bitcoin, the 7 day, on the 7 day, not the 7 day, we want to see the 24 hours leading up to FOMC. Has anything happened? In fact, we can look at the 7 day as well. Like you see, we've got Doge here. We got BNB here, which is 11% up for the week, but less than 1% down for the day. Now, if today's FOMC goes mad to the downside, could we see BNB wipe out all of these gains? It could be mad. 90% on Doge this week. It's more than 90%. I think it was 150 something percent. You know, somebody says here, crypto K below says, reckon I can get an entry in a short at 2690. Let's have a look. 2690. Oh mate, that's, yeah, it's possible. Yeah, 20. No, that's 20. Hold on. But that's pushing towards the upside. Why would you look to short there? Why would you look to short at 2690? Oh, I see it. Okay, a mean reversion to the mean. All right. Yeah, it's a possible trade, very possible trade. Looking here for a short. I see what you're doing there. Yeah, maybe it's possible. Look, with FOMC, that's how it is. You're going to get big spikes to the upside and big spikes to the downside. Look, Bitcoin is falling, but weirdly, in a way, so is Dixie. Dixie hasn't really done anything. It's moved a tiny bit. Bitcoin's taken a fat shit. All right. Are we live on the press conference? Okay, we are. Right, guys, I'm going to put this on now. I'm going to turn this on. If you want to get your question read, because there's too many comments coming in, feel free to drop a super chat. I will read those out. Don't worry. I promise you I will. We got a super chat yesterday. Dude was super happy with the response. Also, before we turn this on, make sure you are liking the video, by the way. There's over 250 of you, absolute legends. Please like the video. Please subscribe to the channel, bottom right-hand corner. Let's kick off this press conference, okay? Make sure you let me know in the chat as well if you guys can hear it clearly, all right? Make sure you can hear me too. Visit federalreserveeducation.org to find links to resources and Reserve Bank programs offered near you. Link to description below. Reserve Education on Twitter at FedEconEd. Yeah. Okay, here for the FOMC. I don't know what I want to see. I'm just here for the FOMC. I'm about to lose all my money. Yeah, I got no P. Whoo! It's getting heated. It's getting heated out here, guys. It's getting heated. Look. Bitcoin just wiped the stops. Yeah, come on. Yeah. Oi, look at Ethereum. All of the members of the board are appointed by the President of the United States. Jeez, hey. By the United States Senate. The Fed also includes 12. Yeah, what a song. Sing along, yeah. The Reserve Bank serves as the central bank's. I pause this, man. What is this? Chat, why have you got me playing this? I just realized in my head now, why are we playing this? We'll just wait for the press conference. I'm here singing songs to you guys while we've got the market going absolutely bonkers. Look, listen, let's focus on this. Apologies for the weirdness. That was weird. Hey, Dixie though. Is it Dixie that's actually moving this market? Because we're on the 5-minute chart here for Dixie, and I swear it's not done anything. Doesn't feel like the 5-minute chart. This feels like the hourly. It is a 5-minute chart. That's weird. We've got Dixie not really doing. Yeah, it's pushing up a little bit, but doesn't warrant Bitcoin and Ethereum dropping like this. Oh, okay. All right. Here we go. We've got Sativa Nakamoto here saying, turn up the volume of the press conference at 2:30. All right, cool. Yes, of course. That was stupid of me. So we've got the press conference in half an hour, not actually here. But the results are going to come out any moment now. I do believe the results come out in a minute. KAR Crypto, I hope you haven't left the stream, because if you have, I'm going to need to go and find these numbers. I can do that, but if you're here, it would just be great if you could put the numbers in the chat. Whew. Let's have a look at some of these comments. Because I know everybody's excited. I know everybody's anxious, excited. Oh, we've got 136 likes. Amazing. Thank you, everybody. Thank you. Are the results out? All right, 6 p.m. 6 p.m. London time. Are the results out? Oh, fudge. Look at Ethereum dumping like there's no tomorrow. Bomba clot. What is. Oh, man. I should have not clicked bullish. No, man. No. I can't scroll down. Oh, okay, come on. Hey, who longed it? One of you lot in the chat longed it. Oh shit, look. Oh, bomba clot. There we go. Told you, FOMC is nasty, man. It must have been a 75 BPS increase. Must have been. Yeah, 75 BPS. Thank you, KAR Crypto. I see everybody else putting it in here as well. Thank you, MNT. Thank you, Mr. Rahman. It was, in fact, 75 BPS. Now, the weird thing is, right, this is the weird thing. If it is a 75 BPS increase, which we know it is now, but if it is, then is the market going to, respond in a bullish way because we all saw it coming and it was priced in? The dip that we had the last 2 days was priced in for this? Or is it going to dump from here? Should be interesting. Look at the S&P. S&P is expressing dominance right now. Oh my God, I can't even keep the chart together. Blood, look at the S&P. It looks madder than Bitcoin does, in my opinion, because it looks clean. You know the over-under pattern? Do you guys know that over-under pattern? You know, where you've got the level, deviates below, comes back above, wicks into it once, and bang, gets straight send off. Right here. I don't know if you can see where my cursor is, but right there, that's the level. You can see the deviation. You can see the wick right into it and boom, shoot off. Look at Bitcoin. Bitcoin's keeping up, G. Bitcoin's not here to play games. Dollar. Yo. Shit. Look at the dollar. Look at the dollar. It's over. Together it's over. It's over for the dollar. Told you, the bullish man them won. The bulls are here. Oh my goodness. This is a good FOMC meeting. Yeah, this is the kind of FOMC meeting we need to be doing every week. Okay. This is what bull market feels like sometimes. You know what I'm saying? This is all right. This is all right. Hey, some people are saying bull market confirmed. Let's go. What are we saying in the chat? Phil saying, wow. Lily saying, loving this, get in. Mr. DFT is saying bull market confirmed. I think we're a bit away from that, Mr. DFT, but for today, for sure, it's looking sexy. Look at that from the dollar, man. I hope the dollar can stay there. What's Hafu saying? Hafu says it stops at break even 21,000 and 1650 for Ethereum. We got Sultan here saying mauling. We got Victor saying cleaning stop losses. Yeah, man, that's what FOMC does. Look at these Darth Maul candles, man. But the dollar, though, oh man, the dollar looks like it died, man. That looks terminal, bro. I'm not even joking. That looks horrible. Horrible for the dollar. Which is good for us, right? Look, man, the more the dollar can chill out, the more we can get a risk on environment. I want risk on to come back. I want to see Ethereum doing these big candles like this. All right, now it's time to tell me the truth. Who is long on altcoins? I know some of you in the chat. There's a lot of people in the chat right now that have just gone silent. Who's long on altcoins? And what did Bitcoin top out at in the meantime? Bitcoin hit 20,735. The S&P rallied from 3,830 to 3,890. That was a 60 handle push right there. That's not bad from the S&P. We've got Ethereum. Ethereum has to be the craziest one. Ethereum, right? We've got 1528 and it rallies all the way to 1594. Blah, don't mess with Ethereum. Vitalik. Look at the comments coming in. Hey, the bulls are out. The bulls are coming out. I can see you lot. All right. Let's see what you guys were long in today. All right. So Zahid was long on ETH. Santiago PYR. We had Jody on Inge. We had this geezer here who bought everything. BTC, ETH, Matic, Inge, Short Doge. He hedged. This guy here, a round of applause for this guy. He bought everything and hedged against Doge. Amazing. We've got Rune and Zelika here. I like that. That's very interesting, very new. We've got Spot on CHZ. Don't fade CZ from Binance. You don't fade the Binance CEO. That's not going to work. We've got more PYR here. Yep, we've got Inge again. We've got Doge. Lily, were you long Doge? Were you actually long Doge? Because if you were long Doge, you're crazy. You're actually crazy. Went long Doge right before FOMC. This crazy girl. We've got who else have we got in the chat? God, look at the comments flying in. Amazing, amazing, amazing. Matic, somebody long Matic as well. Somebody went long on ENS. Yeah, some people are short. Agreed, some people are short. But look, at the end of the day, for those who went short, it's not a big deal. This is FOMC. Everything that you're seeing on the screen here is probably going to retrace. So look. If we've got Bitcoin here at where did it rip? It ripped at around 20,400. Yes, Bitcoin can go higher. I do think it will come back to 24,400. I do think it will, just because that's what FOMC does. It retraces. And same for the other trades as well. For here, we've got the dollar. I don't want it to go up, but it could, At the same time, Ethereum and S&P. Now, look, if you got the trade wrong, there is no problem with that. You guys all have to start seeing this show even as a club. You should start seeing this show as a hobby. Trading is there for you to be right or wrong. You've got to study over the course of years to see how you can become right. Okay, so if you got it wrong, it doesn't matter. You got one trade wrong. It doesn't. Who cares? It's okay to be wrong. There's too much going on Twitter right now, even on YouTube. You see me, I called this and I called that. You see that where it went up 15,000x. I called that. You know what I'm saying? Don't worry about it. If you were wrong, you were wrong. Screw it. The world carries on. Okay? Blood, look at Ethereum right now. Oh my goodness. Oh my goodness. It's like someone did black magic on the bears. I'm telling you, this is mad. Look at the dollar, bro. The dollar is the one. Like, the dollar actually looks finished out here. All right, I'm going to tell you guys, I was holding Sushi. I wasn't all in on Sushi before anybody says it. I had a 5-figure bag. All right, I had a 5-figure bag of Sushi. Am I going to take profits? Well, I've been holding it for quite a while now, to be honest. I've been holding Sushi for quite a while. It's gone up, it's gone down, it's gone up, but it's been trending upwards now. I don't know if it's going to trend further downwards from here, but we are going to see, all right? We are going to see. Let's see what Bitcoin, Ethereum does from here. Okay, what are you guys saying in the chat? Florin, beautiful comment, man. Florin says just manage risk and you'll be fine. Hafuel says 1640 closing in KAR crypto. 1640, are you guys shorting it or are you guys closing your shorts? Because Ethereum took out the stops here. But it's not over yet. It could still be you could still fade this. This could still be faded. I'm telling you. This is FOMC. FOMC, for those of you who voted in the earlier poll saying you're here for the entertainment, well, you're right in a way. You're right. Trading this is not easy. I tell you now, trading this is not easy. And if you are trading this, then good luck. Good luck. It's really difficult to trade this. It's really, really difficult. And I do respect for those of you who are trying, to make it, especially, but mainly you're brave. All right. We are at 151 likes. You amazing, amazing community. Thank you very much for your support. And how far are we from 5,000 subscribers? Let's have a quick look. All right. We are 126 subscribers away from that big 5K marker. Thank you, Ledgers. Thank you for all your help and support. Massive, massive appreciation to all you guys and girls, ladies and gentlemen, boys and girls. Thank you very much. Thank you very much. Thank you very much. So look, what else should we look at? Should we look at Link? Let's have a quick look at Link because I mapped a plan out for Link. Maybe I bought some, maybe I didn't. Maybe I bought some, maybe I didn't. Let's have a look at what Link did. What did I say about Link's mid-range? What did I say about Link's mid-range? For those of you who are looking, pay attention to the top corner of the screen. I said we've got a range high, we've got a range low, and we've got a mid-range here. How did I get that range? Question number 1. Where is price trapped? That's the first question. Number 2, where are the stops? Where did we have our stop loss? We had our stop loss here. No, it was here. We had our stop loss around here. And there, mid-range, boom. Beautiful reaction off the mid-range. Beautiful reaction. Now, like I said, I may have taken this, I may have not. I didn't take it. I told you guys I wouldn't take it, so I didn't. But good for trading, good for understanding mid ranges, good for understanding price action. What's the S&P doing here? I think the S&P fell right into support here. Hold on. There we go. Look at the S&P and tell me what you guys are seeing here. So bear with me. So there's a range right above for the S&P, but where is the S&P right now? What does this look like to you guys? This was the down move here that sent the market higher. We came back lower. We bounced off it for support. Now we've deviated it, got back above, and we're holding it now. Right here, the same down move that caused the market to push up. So leave it to you guys to make a decision on that. All right. Of course, this is a watch along show. On the normal streams that we do here at In It for the Tech, we tend to really break down the market. We look at Bitcoin. We try and understand what Bitcoin is doing. We try and gauge what the market is telling us. But but on the watch along, we are a bit more relaxed, a little bit more relaxed. The Powell speech is going to be in 20 minutes. So I'm going to stay live with you guys for that. I am going to stay live with you guys for that. The thing is, though, I thought it was going to be 10, 15 minutes ago. So I kind of, didn't really plan for this elongated half an hour that we've got right now. But nonetheless, I do love spending time with you guys. All right. So smash up the likes, subscribe to the channel. Appreciate everybody. And we'll just continue watching the dollar drop. Let's have a look at this anyway. Bruh, I was going to say, if it was that music again, I would have not had it. I would have just started going mad. What else have you got in the chat? Keep the comments coming in, ledgers. Joe says, do some live trading. YOLO Doge. You want me to do some live trading right now during FOMC? I've been holding Sushi since like 112. I've shielded Sushi on this channel. I've shielded PYR on this channel. I shielded them all at the bottom. I think during the first bear market rally that we had in June, we took like 6 trades on this channel and we nailed 5 out of 6. We got stopped out on 1 and it was event driven. It wasn't price action. Trading comes as it comes. I don't like to encourage people to overtrade, and I don't want to make it look easier than it actually is. That's why I don't emphasize too much on it. It will get me more views. I agree it would, but it's not healthy for you guys. I actually, when you guys see me in person, when I meet you guys one day or something like that, I want you guys to see me with respect, not as the person who aided you getting wrecked. KAR Crypto is saying Dixie looks like it's at support 10.7. Oh, Dixie filled the gap. Look, Dixie gap filled. You see this gap right here? Let me mark this out like this right here, and then I'll pull this out like this. Yeah, so Dixie filled the gap. That's what it did. So yeah, Dixie can bounce from here, but I wouldn't fade it. I'm not going to fade this personally. I think that that this thing is probably going to go lower before it goes higher. That's what I think. Obviously, as you know, I do expect a retracement, but I don't think it's just going to happen from this candle. Look at the formation, KAR. Does this formation look like something that's going to rip up, or does it need to first find a base, like a foundation? Maybe it needs to do something like this. Then it would look like, a chart. It doesn't really look like a chart right now. It looks like it fell off a cliff. And because it fell off a cliff, in a way, we're technically knife catching, just blindly buying support here. It can go up, but if it does go up, I'd expect it to do something like this. Like that. Do you see what I mean? So I leave it to you. Due diligence is there for you guys. That's my thoughts. Well, so you guys saying, keep the comments coming in. Keep the comments coming in. Keep the comments coming in. Deviation in place is aromatic. Deviation for what? To the upside or the downside, my bro? Because to the upside, for something like Bitcoin, for example. Oh no, this is, oh fuck me, what have I done there? So let me do this, and let me do this. That's the annoying thing about TradingView, I swear to God. So to the upside for Bitcoin, this is not Bitcoin, this is fucking link. XB. There we go. All right. So for the upside on Bitcoin, we had some clear targets. We had some very, very clear targets. I've just got to do this. For the upside on Bitcoin, really and truly, I'm looking at 21,500 for the upside on Bitcoin. Um, if it breaks through 21.5, which according to SC it could do, just because of the way that price is moving, everybody's really bearish. Like everybody's super bearish. Now, if we do get a push to the upside, a lot of people think 21.5 could cap it. It could be 21.5, 22.4, 24, or it could go as far as 28 to 30. And that's a real thing. It's a real thing. If this is a proper bear market rally and we've been accumulating here, then a push up into 28 is probably needed in order to get the liquidity that we need to go even lower. Furthermore, I mean, like, we don't even need to go to 28. We can go as far as 25. If we swipe this high up here, I don't know if you guys can see it. If we swipe this high up here on 25, look at the top left corner of my screen, right? This high right here on the 20 on Monday the 15th of August, 25k. If we swipe that, you know how much stops are going to be there? You're talking about stop losses on the weekly, stop losses on the monthly. We'll take a lot of liquidations from that area right there, you know? And then I can imagine pushing all the way back down. So boosh, like that. I could really see that. And I think I explained it on my show yesterday as well. I talked about Bitcoin's a potential double top being in play for Bitcoin based on what we are seeing. Now, what I'm going to do is I'm going to keep the chart naked anyway, right? I'll keep the charts naked just because it'd be interesting to see. Obviously, look, we've got Jerome Powell coming to speak in a moment, right, for the FOMC press conference. So we'll watch that together. It's only 14 minutes away. So stay tuned for that. That should be interesting. And Phil the Flying Frenchman, take care. No problem. So sorry, NJ, heading on the road. I'll be on and off. No problem at all, my bro. Thank you very much for tuning in. Thanks to all of you guys and girls for tuning in, to be honest. It's great to have all of you here. It really is. We're at 170 likes as well. What's the subscriber count saying? Subscriber count is continuing to grow. It is continuing to grow. We are approaching that. We're 123 away now from 5k subscribers, and I'm proud of that. I'm very proud of that. Who's excited for this press conference? What do you think Powell is going to say? Really and truly, I don't think he's going to talk about. I don't think he's going to be talking about how he's going to stabilize the economy from here. I think that it was specifically spoken about yesterday, where he said it wasn't him who said it specifically, but it was announced that the sort of path towards deflation is not going to be today. That will be on another note. So interesting how obviously we've got the decision today, 75 BPS, but we're not going to get much. So this press conference should be interesting. I wonder if he'll talk about crypto again. He did that recently, you know. Powell was talking about DeFi very recently. And here we go. We've got everything starting to retrace now. Let's have a look. No, the S&P is moving a lot heavier than Ethereum and the dollar. That's very interesting. ES driven rally, equities driven. We've got this press conference as well in 12 minutes. Keep the comments coming in, Ledgers. Keep the comments coming in. I am going to stick around for this press conference. I am interested to see what you guys and girls are all saying. Do you think this is going to continue? I guess is the question that I would pose myself if I was in the audience. Do I think this is going to continue? And to be really honest with you guys, I don't think so. I don't think so. I personally think that we are approaching those final stages of a bear market, and simple market cycle analysis, shows us that Bitcoin has had waves of bullish, bearish accumulation. We've seen it over and over again. I've got a playlist on my. If you go to the front page of the channel, right, the homepage of In It for the Tech channel, you'll see playlist, an educational playlist. Now that's going to grow as time goes. I've only got 2 episodes in there, but obviously one's about risk management and the other is about market cycles. So, if you haven't seen that episode that I did on market cycles, you really should look into it. I'll tell you why. It'll be worth your time because, as I mentioned a few minutes ago, Bitcoin goes up for a year, it goes down for a year, and it accumulates for a year. And if you don't believe me, watch the video and I'll show you. Watch the video. It's very basic, but the amount of emotions that go flying during those periods of time, and the fact that it's happening all on the monthly and the weekly, people, they can't handle their emotions. They can't handle their emotions, and they don't know how to trade the cycle, so they don't know what to look for at the tops and at the bottoms. Do you see what I mean? So, Bitcoin topped out on November 2021. We are now in November 2022. How much lower do you think you want this to go? If Bitcoin was 20-30% down, and we were getting news that was as bearish as we are right now, then yeah, I'd expect Bitcoin to be on its way down. I'd expect to see a lot of short scenarios across the board. But Bitcoin went from sort of 70K, and it's gone all the way as far as what, 17.7K or something like that. Did it hit 17K? I think it did. I can check that. Oopsie daisy. That's Ethereum. Let me check. Let me check. What did Bitcoin hit? Bitcoin at the lowest. Yep, 17.5K. 17.5K. Now, given the fact that Bitcoin has hit that 17.5K, from 70K, how much lower do you want it to go to? If it's going to 1K, can you really justify that? Has Bitcoin ever dropped 99% before? If you want to talk about potential lower prices, you must come with heavy substance. You must. You have to talk about why you think it will go down that low, why you think that the global markets will allow it to go that low. What do you think your trajectory for the S&P would be if Bitcoin went that low? What do you think about gold and silver if you think Bitcoin's going that low? Because if you think about it, Bitcoin is trading like a stock now. It's not the same as it was in the past. It's trading much, much more like a stock. What have we got here from MMT? MMT saying FOMC ongoing interest rates increases will be necessary to achieve a sufficiently restrictive policy stance that will eventually return inflation to 2%. That's bullish. That's bullish. I mean, it's bearish for us in the short term. In the interim, yeah, it sucks. It sucks really bad. And I appreciate that. And I know a lot of people here, look at Sushi go, look at Sushi, look at Sushi. God, I love to see Sushi pump. I might sell though, I'm not sure. But yeah, a lot of people are bearish on Bitcoin, man. A lot of people are bearish on Bitcoin. And I don't understand why. Why at these levels would they be bearish on Bitcoin? It's funny because it's you find most of the time that the people who are bearish on Bitcoin at these levels are the people that were longing at 69K, 70K. And it's just weird how market psychology works like that. Inflation to 2% though, from NMT there, I do think that would be massively good for us. It would give us enough opportunity to get back into a risk-on environment. We need something to get us back into that risk-on environment, man. We all missed the bull market. If you missed the bull market, smash up the likes. We got 175 likes. Let me see who misses the bull market. We'll know if we get the like spike. You know what I'm saying? I know exactly how you guys and girls feel, genuinely. I've been here for 2-3 bull markets now. Better part of 2 bull markets, I'd say, rather than 3. But in the next bull market, I'm going to be seeing a lot of things. I know for a fact I'm going to be seeing a lot of things that I didn't in the last bull market and the previous one before that. And the same thing for you guys too. Look what Florin is saying here. Florin is saying, I've never been in a bull market. Well, Florin, I'm telling you, you better hold on to your butt, because it is a roller coaster. For those in the chat here who have been through a bull market, tell Florin in the chat right now what it means to go through a market like that. The bull market, Florin, you see this candle here on the S&P? Every other day you get a candle like this, and it doesn't retrace. It pulls back a little bit, but it just keeps going up. That's what a bull market is. It's insane. Insane. What are some of you here saying about the bull market? Victor is saying that he's never been in a bull market. Nazar is saying bull market is better than sex. To some degree, I agree. Yeah. We've got some more comments here. Do you know what? Let me ask you guys another poll. I know I'm getting a bit annoying with these polls, but it's just good to see your takes on all of it. So what was I going to say? Here we go. Let me bring it up for you guys 1 second. S&P's pushing back up, bit nuts. Right, one more poll we'll do right before the conference, okay? So we will say, have you ever been in a bull market? Yes or no? I'm really interested to see what you guys say here. Oh, we got some bots in the chat. We need to clear the bots. Mods, clear the mods. Thank you, Hafawell. Thank you, thank you, thank you, thank you, thank you. Clear it. We kept getting weird bots in the chat, man. Really annoying. Check the chat. The poll is live in the chat. I want to see, have you ever been in a bull market? Yes or no? All right, because if you haven't, oh man, you are seriously in for a treat if you haven't. For those of you who have, you guys will be able to explain. You guys will be able to tell. But wow, I'm excited for you. If you haven't been through a bull market and you're here every day and you're focused on crypto and you're studying and you're at the charts and you're learning FA, you're learning Bitcoin, altcoins, I'm really excited for you. I'm really excited for you. You're embarking on a journey that is very lonely. It's very tough. It's a journey that many people don't understand, but it is so effing rewarding. It is so effing rewarding. Believe me. Here goes Ethereum, S&P. The dollar, it's weird though. The dollar probably going to go lower in my opinion, man. Look at that chart. It just looks horrible, man. It just looks horrible. Yeah, Florin is saying here, if I don't manage to get to the next bull market, I don't deserve it. Yeah, to some degree. Keep working hard, keep pushing it. Obviously, we'll be here on the NJ show. We'll be here, all right? And I'll make sure that I'm with you guys. All right, it won't just be bull market for me. It will be bull market for the channel. And if it's bull market for the channel, that means it's bull market for you. All right. I take so much pleasure doing this content for you guys, just as much as I take pleasure reading your comments, just as much as I take pleasure seeing what you guys have to say. We got a lot of weird opinions in the chat as well. Sometimes we get opinions that go bonkers and everybody starts fighting with each other, but then we calm it. We calm it. We like the community that we have. We have a really good community here in the NJ show. Thank you, Jody. Appreciate your comment, Jody. Right, let's close this poll off. If you haven't voted in the poll chat already, go into the live chat and quickly make your vote. I'm about to close it off. Very, very interesting results. Come on, lads. Come on, ladies. One more second. Push your votes in right before the conference starts. All right. The conference will start in 3 minutes. I'm going to close off this poll. Get your comments in. Get your vote in. Right. I'm going to close this poll. All right. I'm going to close this poll. Right. Okay, let's have a look at the results. Now, the results for this poll are insane. 67% of you, including myself, has been in a bull market. 32% of you have not yet experienced your first bull market. That is crazy. That is crazy. By the way, look at the S&P go. Look at Bitcoin go. But the dollar's not really pushing down as much. Interesting. Very interesting. Interesting. What's Sushi saying? Hey, what Sushi's doing? Nice, Hey, let me check my phone real quick. Man needs to check my phone real quick. Because what Sushi, yeah? Sushi's paying for dinner tonight, G. Come on. Hey, who's up right now? Somebody in the chat, let me know if you're up. Celebrate with me. Yeah, boy. Sushi's printing today. Sushi is printing today. Na, 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 na. Look at that daily candle on Sushi, my guy. It's not on the chart right now because I've got these ones here, but even the S&P, look at this beautiful move on the S&P. I mean, look, this could still technically be bearish, but I don't know, man. I'm tempted to take fucking profit. I am so tempted to take profit. Let me trim some off. I'm going to trim some off my Sushi bag. You see, it's not nice. It's not, taking profit isn't nice, but you've got to do it. You've got to do it. Yeah, cool. I took some profits. I thought it was worth taking some profits just because it's going crazy. I didn't shank the position completely. I'll reload though. If it dumps, I'm going to reload for sure. But it's cool though. It's cool that we were able to do it together. And look, now you just saw what I did. I saw the market pumping. I saw it. I said, look at the daily. It's looking kind of sexy. X, Y, and Z. And then I said, I'm trimming some off. And then I picked up my phone just as you saw me do. And I just trimmed the position. That's it. And yeah, I'm out. Well, I'm out like 40%. I've still got like 60%, but we'll see what I go on. I'll reload on the dips if it comes. Rightio, we are 1 minute away from this press conference. Let's get the press conference going. I'm going to turn up the volume now for the press conference in just a moment. So please make sure you are liking the video, subscribe to the channel. Is this going to be the first video where we get over 200 likes without anyone sort of coming on as a guest? We are going to find out. We're 21 likes away from 200. If you guys and girls can help me get that, that would be freaking amazing. All right? Rightio, let's do this. Let's have a look at this press conference. Is this brother going to chat? Yeah, the volume is up. The volume is up, but this brother's not chatting. Is this on mute? No. Where was that stupid music? Yeah.
Which involves influencing interest.
Yeah. It's them. They need to sort their audio out. So let's see what happens. Yo, Crypto Mac, if you're in the chat, I took some profits on Sushi, yeah? Oh, here we go. Hey, man, like Jerome, you know? Come on, JJ. Big J.
Good afternoon. My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools that we need and the resolve it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 75 basis points, and we continue to anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we're continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance of policy for some time.
Feels like he's telling me off.
I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy has slowed significantly from last year's rapid pace. Real GDP rose at a pace of 2.6% last quarter, but is unchanged so far this year. Recent indicators point to modest growth of spending and production this quarter. Growth in consumer spending has slowed from last year's rapid pace, in part reflecting lower real disposable income and tighter financial conditions. Activity in the housing sector has weakened significantly, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 289,000 jobs per month over August and September. Although job vacancies have moved below their highs and the pace of job gains has slowed from earlier in the year, the labor market continues to be out of balance, with demand substantially exceeding the supply of available workers. The labor force participation rate is little changed since the beginning of the year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in September, total PCE prices rose 6.2%, excluding the volatile food and energy categories. Core PCE prices rose 5.1%. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has created additional upward pressure on inflation. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 75 basis points. And we are continuing the process of significantly reducing the size of our balance sheet, which plays an important role in firming the stance of monetary policy. With today's action, we've raised interest rates by 3.75 percentage points this year. We anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Financial conditions have tightened significantly in response to our policy actions, and we are seeing the effects on demand in the most interest rate sensitive sectors of the economy, such as housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. That's why we say in our statement that in determining the pace of future increases in the target range, we will take into account the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation. At some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal.
I mean, we knew this was coming anyway.
There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go. And incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected. Our decisions will depend on the totality of incoming data and their implications for the outlook for economic activity.
Did you hear what he just said?
We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible.
Did you hear what he just said?
We're taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal. And to keep longer-term inflation expectations. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices in the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
I told you, though. I told you guys. FOMC, it retraces.
Colby Smith with the Financial Times. On the need to slow the pace of rate increases at some point, is a downshift contingent on a string of better inflation data specifically between now and, let's say, the December meeting? Or is that something that the Fed could potentially proceed with independent of that data, given the lag effects that you mentioned?
So a couple things on that. We do need to see inflation coming down decisively, and good evidence of that would be a series of down monthly readings. Of course, that's what we'd all love to see, but I've never thought of that as the appropriate test for slowing the pace of increases or for identifying the appropriately restrictive level that we're aiming for. We need to bring our policy stance down to a level that's sufficiently restrictive to bring inflation down to our 2% objective over the medium term. How will we know that we've reached that level? Well, we'll take into account the full range of analysis and data that bear on that question, guided by our assessment of how much financial conditions have tightened, the effects that tightening is actually having on the real economy and on inflation, taking into consideration lags, as I mentioned.
Look at the S&P.
We will be looking at real rates, for example, all across the yield curve and all other financial conditions, and as we make that assessment.
Hi, Howard Schneider with Reuters. Look, I'm sure there's going to be tons of confusion out there about whether this means you're going to slow in December or not. Would you say that the bias right now is not for another 75 basis point increase?
So,
Oh, this is
what I
interesting.
want to do is put that question of pace in the context of our broader tightening program, if I may, and hit to talk about the statement language along the way. So I think you can think about our tightening program as really addressing three questions. The first of which was and has been how fast to go. The second is how high to raise our policy rate. And the third will be eventually how long to remain at a restrictive level. So on the first question, how fast to tighten policy, it's been very important that we move expeditiously, and we have clearly done so. We've moved 3.75% since March, admittedly from a base of 0. It's a historically fast pace, and that's certainly appropriate given the persistence and strength in inflation and the low level from which we started. So now we come to the second question, which is how high to raise our policy rate. And we're saying that we'd raise that rate to a level that's sufficiently restrictive to bring inflation to our 2% target over time. And we put that into our post-meeting statement because that really does become the important question we think now is how far to go. And I'll talk more about that. We think there's some ground to cover but before we meet that test, and that's why we say that ongoing rate increases will be appropriate. And as I mentioned, incoming data between the meetings, both the strong labor market report, but particularly the CPI report, do suggest to me that we may ultimately move to higher levels than we thought.
That's when I think the market will dump, when CPI comes out.
It's very uncertain, though, and I would say, we're going to find it over time. Of course, with the lags between policy and economic activity, there's a lot of uncertainty. So we note that in determining the pace of future increases, we'll take into account the cumulative tightening of monetary policy as well as the lags with which monetary policy affects economic activity and inflation. So I would say as we come closer to that level, move more into restrictive territory, the question of speed becomes less important than the second and third questions. And that's why I've said at the last two press conferences that at some point it will become appropriate to slow the pace of increases. So that time is coming. And it may come as soon as the next meeting or the one after that. No decision has been made. It is likely we'll have a discussion about this at the next meeting, a discussion. To be clear, let me say again, the question of when to moderate the pace of increases is now much less important than the question of how high to raise rates and how long to keep monetary policy restricted, which really will be our principal focus.
If I could follow up on that, to what degree was there an importance or weight given to a need to signal this possibility now, given all the concerns really around the globe about Fed policy sort of driving ahead and everybody else, dealing with their own stress as a result?
Well, I think I'm pleased that we have moved as fast as we have. I don't think we've over-tightened. I think there's very difficult to make a case that our current level is too tight, given that inflation still runs well above.
Welcome to the chat, Trader SC. Good to see you, my bro.
I think that at this meeting, the last two meetings, as I've mentioned,
Trader SC in the house.
There would come a point, and this was a meeting at which we had a discussion about what that might mean, and we did discuss this. And as I mentioned, we'll discuss it again in December. But there's I don't have any sense that we've over tightened or moved too fast. I think it's been good and a successful program. That we've gotten this far this fast. Remember though that we still think there's a need for ongoing rate increases, and we have some ground left to cover here, and cover it we will.
Hey, this is mad. We knew that this was going to come, though.
Of the Wall Street Journal. Chair Powell, core PCE inflation on a 3 or 6 month annualized basis and on a 12-month basis has been running in the high fours, close to 5%. Is there any reason to think you won't have to raise rates at least above that level to be confident that you are imparting enough restraint to bring inflation down?
So this is the question of does the policy rate need to get above the inflation rate? And I would say there are a range of views on that. That's the classic Taylor principle view. But I would think you'd look more at a forward-looking measure of inflation to look at that. But I think the answer is we'll want to get the policy rate to a level where it is where the real interest rate is positive. We will want to do that. I do not think of it as the single and only touchstone, though. I think you put some weight on that. You also put some weight on rates across the curve. Very few people borrow at the short end.
It's not looking good.
The federal funds rate, for example. So households and businesses, if they're very meaningfully positive interest rates all across the curve for them, credit spreads are larger, so borrowing rates are significantly higher, and I think financial conditions have tightened quite a bit. So I would look at that as an important feature. I'd put some weight on it, but I wouldn't say it's something that is the single dominant thing to look at.
If I could follow up, what is your best assessment or the staff's best assessment right now of the current rate of underlying inflation?
I don't have a specific number for you there. So there are many models that look at that. And I mean, one way to look at it is that it's a pretty stationary object, and that when inflation runs above that level, for sure, substantially above for some time, you'll see it move up, but the movement will be fairly gradual. So I think that's what the principal models would tend to say. But I wouldn't want to land on any one assessment. There are many different as you know, many different people publish an assessment of underlying inflation.
Thank you.
This is Mad.
Hi, Chair Powell. Thank you for taking our questions. Gina Smiley with New York Times.
Gina, yeah?
Do you see any evidence at this stage that inflation is or is at risk of becoming entrenched?
Is inflation becoming entrenched? So I guess I would start by pointing to expectations. So if we saw longer term expectations moving up, that would be very troubling. And they were moving up a little bit at the middle part of this year, and they've moved now back down. That's one piece of data. Shorter term inflation expectations moved up between the last meeting and this meeting. And we don't think those are as indicative, but they may be important in the wage setting process. There's a school of thought that believes that. So that's very concerning. I guess the other thing I would say is that the longer...
I can see you guys in the chat going mad.
...into this episode of high inflation, and we don't have, a clearly identified scientific way of understanding at what point inflation becomes entrenched. And so, the thing we need to do from a risk management standpoint is to use our tools forcefully but thoughtfully and get inflation under control, get it down to 2%, get it behind us. That's what we really need to do and what we're strongly committed to doing.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. The statement points to lag times. I'm wondering if you can walk us through how you judge those lag effects, what that timeline looks like over the coming months or even a year, and where you would expect it to show up in different parts of the economy.
Yeah, so the way I would think about that is, it's a commonly for a long time thought that monetary policy works with long and variable lags, and that it works first on financial conditions, and then on economic activity, and then perhaps later than that even on inflation. So that's been the thinking for a long time. There was an old literature that made those lags out to be fairly
You guys are
long.
killing me in the chat.
There's newer literature that says that they're shorter. And, the truth is we don't have a lot of data of inflation this high in what is now the modern economy. One big difference now is that it used to be that you would raise the federal funds rate, financial conditions would react, and then that would affect economic activity and inflation. Now, financial conditions react well before, in expectation of monetary policy. That's the way it has moved for a quarter of a century, is in the direction of financial conditions, then monetary policy, because the markets are thinking what is the central bank going to do? And there are plenty of economists that also think that once financial conditions change, that the effects on the economy are actually faster than they would have been before. We don't know that. I guess the thing that I would say is it's highly uncertain. And so from a risk management standpoint, it would be irresponsible not to ignore them, but you want to consider them, but not take them literally. So I think it's a very difficult place to be, but I would tend to want to be in the middle, looking carefully at what's actually happening with the economy, and trying to make good decisions from a risk management standpoint. Remembering, of course, that if we were to over tighten, we could then use our tools strongly to support the economy. Whereas if we don't get inflation under control because we don't tighten enough, now we're in a situation where inflation will become entrenched, and the costs, the employment costs in particular, will be much higher potentially. So from a risk management standpoint, we want to be sure that we don't make the mistake of either failing to tighten enough or loosening policy too soon.
And if I could follow up, should we interpret the addition to the statement to mean that more weight is put into those lag effects than they would have been after previous rate hikes?
So I think as we move now into restrictive territory, as we make these ongoing rate hikes and policy becomes more restrictive, it'll be appropriate now to be thinking more about lag. Of course, we think about the lags are just sort of a basic part of monetary policy, but we will be thinking about them. But we won't be, I think we'll be considering them, but because it's appropriate to do so. Let me say this: it is very premature to be thinking about pausing. So people, when they hear lags, they think about a pause. It's very premature, in my view, to think about or be talking about pausing our rate hike. We have a ways to go. Our policy, we need ongoing rate hikes to get to that level of sufficiently restrictive, and we don't really know exactly where that is. We have a sense, and we'll write down in the December meeting a new summary of economic projections, which updates that. But I would expect us to continue to update it based on what we're seeing with incoming data.
We've got Jerome Powell, Fed chairman of the committee, speaking about the world monetary policies, and everybody in the chat's talking about Gina. Everybody in the chat.
A lot of sectors you don't see a ton of effect. Is the pathway and channels through which monetary policy works changing? Is it narrower than it used to be? And on housing in particular, are you at all worried that you're crimping housing supply in ways that might cause problems down the road?
I don't know that the channels through which policy works have changed that much. I would say a big channel is the labor market, and the labor market is very, very strong.
Are you guys seeing Ethereum?
The household, of course, have
oh my god,
strong balance sheets. And so we go into this with
look at the dollar. Look at the dollar.
Labor market and excess demand in the labor market, as you can see through many different things, and also with households who have strong spending power built up. So it may take time. It may take resolve. It may take patience. It's likely to get inflation down. I think you see from our forecasts and others that it will take some time for inflation to come down. It'll take time, we think. So, sorry, was I getting to your question there? The housing part of it. Yeah. So, we look at housing. Of course, housing is significantly affected by these higher rates, which are really back where they were before the global financial crisis. They're not historically high, but they're much higher than they've been. And you're seeing housing activity decline. You're seeing housing prices growing at a faster rate, and in some parts of the country declining.
Bruh.
I would say housing
right after we took profit
was very overheated for the couple of years after the pandemic as demand increased and rates were low. We all know the stories of how overheated the housing market was, prices going up, many bidders, no conditions, that kind of thing. So the housing market needs to get back into a balance between supply and demand. We're well aware of what's going on there. From a financial stability standpoint, we didn't see in this cycle the kinds of poor credit underwriting that we saw before the global financial crisis. Housing credit was very much more carefully managed by lenders.
Come on.
It's a very different situation.
Someone went short.
Doesn't appear to present financial stability issues, but no, we do understand that's really where a very big effect of our policy is.
Hi, Victoria Guida with Politico. I wanted to ask about the labor market. You mentioned early on again.
Which one's Victoria?
Job openings are very high compared to available workers, and I'm just curious to what extent you do and don't draw a signal from that. So, for example, if wage growth is slowing and if maybe the unemployment rate starts to tick up, will that make you sort of decrease your focus on job openings? What do you see?
Be respectful in the chat,
materially
gentlemen.
hurting?
Be
How are you
respectful
thinking
in the
about the labor
chat.
market as it relates to inflation?
So we talk a lot about vacancies and the
Powell
vacancies
looks
on
good though, you
employment
know. He looks like a
latest
straight
Bitcoin. It's
G.
just another data series. It's been unusually important in this cycle because it's been so out of line, but so has quits.
ETH don't look
so
good
have
though.
wages. So we look at very wide range of data on the unemployment.
That's mad.
labor
I told you it would
market.
retrace.
I'd start with unemployment, which is typically the single.
Look at Bitcoin,
statistic you
right
look
where
at
it
is at a
started.
50-year low,
Look at ETH,
3.5%.
right where
We're
it started.
getting really nothing in
Same with
labor
the dollar,
supply now.
not the
I
S&P
think
though.
a very small increase this year, which we really thought we would get that back. Most analysts thought we would get some labor supply coming in. You mentioned wages. So
We got 200 likes, yeah?
That is sort of a
Nice.
mixed picture.
Thank you,
It's true
everyone.
with
Thank
average
you.
hourly earnings you see. So I would call it a flattening out at a level that's well above the level that would be consistent over time with 2% inflation, assuming a reasonable productivity. There with the ECI reading this week, again, a mixed picture. The headline number was a disappointment. Let's just say it was high. It didn't show a decline. There's some rays of light inside, that if you look at private sector workers, that did come down. The compensation did come down. But overall, though, the broader picture is of an overheated labor market where demand substantially exceeds supply. Job creation still exceeds, the sort of the
That could be a big
level
one.
that would hold the market where it is.
That could be a shout still.
So that's a picture. Do we see? We keep looking for signs that sort of the beginning of a gradual softening is happening, and maybe that's there, but it's not. It's not obvious to me because wages aren't coming down; they're just moving sideways at an elevated level, both ECI and average hourly earnings.
Oil looks bullish though.
We would love to see vacancies coming down, quits coming down. They are coming down. Vacancies are below.
Yeah, oil looks
their all-time
bullish.
high, but not by as much as we thought, because in that, the data series is volatile. We never take any one reading. We always look at, 2 or 3. So it's a mixed picture. I don't see the case for real softening just yet, but we look at, I guess as I just showed you, we look at a very broad range of data on the labor market.
So do you see wages as being a significant driver of inflation?
I think wages have an effect on inflation, and inflation has an effect on wages. I think that's always been the case. There's always a going back and forth. The question is that really elevated right now? I don't think so. I don't think wages are the principal story of why prices are going up. I don't think that. I also don't think that we see a wage price spiral. But again, it's not something you can, once you see it, you're in trouble. So we don't want to see it. We want wages to go up. We just want them to go up at a level that's sustainable and consistent with 2% inflation. And we do think that given the data that we have, that this labor market can soften without having to soften
what Lily's
as much as
saying.
history would indicate through the unemployment channel. It can soften through job vacancies declining. We think there's room for that, but we won't know that. That'll be discovered empirically.
Thank you so much. Kayla Tausche from CNBC. Earlier last month, the United Nations warned that there could be a global recession if central banks didn't change course. The new UK Prime Minister warned of a profound economic crisis there. And I'm wondering how the Fed is weighing international developments.
It's not looking good.
A very strong economy here in the US that would seem to be bucking those trends.
So, of course, we keep close tabs on economic developments and also geopolitical developments that are relevant to the economy abroad. We're in very frequent contact with our foreign counterparts, both through the IMF meetings and the regular meetings with central banks that we have, and I have one this weekend with many central bankers. So we're in touch with all of that. So I guess it's clearly a difficult time in the global economy. We're seeing very high inflation in Europe, significantly because of high energy prices related to the war in Ukraine, and we're seeing China's having issues with the zero COVID policy and much slower growth than we're used to seeing. So we're seeing we see those difficulties. The strong dollar is a challenge for some countries, but we have it, and we take all of that into account in our models. We think about the spillovers and that sort of thing. Here in the United States, we have a strong economy, and we have an economy where inflation is running at 5%, core PCE inflation, which is a really good indicator of what's going on for us.
I mean, I think there's not much to really dive into from this point. We can keep it going if you want. But I don't think that there is much to really go into. We will be live for CPI in 8 days. That's for sure. We definitely will be doing that. But from here, I think the market has reacted as best as it needs to. So look, listen, it's a very difficult place to be in right now with this market. We knew that this was going to happen. What did we talk about at the very beginning of the episode? We spoke about, making sure that we don't advise anybody to trade during these particular conditions. That's number one. Number two is, if you are trading in these conditions, you have to be prepared to take profits unemotionally. And you saw what I did. I took profits with Sushi, right? You saw I did that. And the market went to tank. Now, the market could have done the reverse. It could have just completely ripped. Okay. And then I would have been missing out on those gains. But it's more important to stay safe than it is to, gamble and bet your profits away. And it's very difficult to follow that. I do appreciate that. But yeah, look, guys and gals, I'm going to be shooting off from here. I'll be really honest with you. This market is not looking great. I would definitely wait for the dust to settle. Maybe we can get a small bounce across the board. That could be possible. But when you're looking at price action like this, we've got to ignore the wicks, I guess, because it's FOMC. Maybe we pull back a little bit lower. Maybe we do. Maybe we don't. We've got a super chat here. Let's see what this guy's saying. So Terra Potter says, what do you think about leverage tokens? ETH down. What do you think about Il Capo of crypto? And last but not least, you're amazing. It motivates me to watch you. All right. So question number one, you said, what do you think of leverage tokens? I think that they're dangerous. I think that it's way better to use Bybit or Prime or Binance. You can sign up to Binance using the link in the description. I do think it's way better to use those rather than the up-down tokens from FTX. The second question is, what do you think about El Capo of crypto? Yeah, he's a friend of mine. I follow him on Twitter. He follows me back. We've engaged with each other a few times. I respect him. He caught the top. He did great. He was also a big bull in 2022. And lastly, you said you left some really nice comments there. So thank you very much. You're always welcome on the stream. All of you are always welcome on the stream. Do remember to subscribe to the channel, by the way, bottom right-hand corner. You can always send in the super chat and I'll always read it out. I'll always make sure I get to it. All right. Thank you, everyone, for tuning in. It was great to see you all. It was another fun FOMC event. We'll do the same one in 8 days for CPI. So make sure you are subscribed to the channel with the bell notification switched on so that you guys can see when I'm going live. All right. It should be fun. CPI is where I think it will get really messy because FOMC is just talk, but CPI, that's not exactly talk, So we'll see. All right. But I'm going to shoot now. All right. Awesome stream. Take care, everyone. Remember to like the video. Remember to subscribe to the channel. See if we can get to 250 likes. All right. Cheers, everyone. Goodbye.